Welcome to Tim's Strategy of the Week series. Today we're going to look at a great strategy that works well on any time frame from the 1 minute through the monthly. Hold on to your hat. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of the Strategy of the Week. I hope you guys have heard that I've got an app now. It's called the Comcash Alerts app. Stay around to the end of the video and I'll tell you a bit about it. We haven't looked at good methods for measuring the strength of the trend in any possible time frame. So today we're going to remedy that situation and look at the ADX or Average Directional Index. Detecting a strong directional move is the most important skill you could have as a trader. No matter what type of trader you are, after you enter a position, you need a strong directional move in the direction of your trade. The ADX indicator can help with that. The ADX indicator simply measures the strength of a trend and whether we're in a trading or non-trading period. In other words, the ADX is a trend strength indicator. This method of technical analysis is used to identify the emergence of strong trends and buy or sell signals. Now be sure you understand how to read and interpret the ADX indicator and don't mistake it for a bullish and bearish indicator. The ADX's moving average only measures the strength of the trend. So if the price is going up and the ADX indicator is also going up, then we have a strong bullish move. And if the price is going down and the ADX indicator is going up, then we have a strong bearish move. The first ADX indicator trading rule says a reading below 25 signals a period of non-trading or ranging market. The second ADX indicator trading rule says when the ADX is above 25, it's enough to signal the strength of a strong bullish or bearish trend. Remember, the ADX indicator doesn't give you any information about the direction of the market. It just provides you with information about the strength of the trend. The ADX indicator uses a smoothing moving average in its calculation. We found what we consider the best ADX indicator setting to use is 20 periods. With our ADX indicator settings, you'll have more accurate signals and it will get you in a trade earlier. The ADX indicator works best when used in combination with other technical indicators. This ADX trading strategy also uses the RSI indicator for timing the market. The ADX indicator can only help us gauge the intensity of the trend, and we'll use the RSI indicator for entry signals. The RSI uses a 20-period setting, which is the same as the ADX indicator settings. So put both the ADX and RSI on your chart. The ADX indicator trading rules will ensure that you only trade when there is a strong trend on whatever time frame you would like to trade, whether it's the 5-minute chart, the hourly chart, the daily chart, or whatever. This ADX trading strategy will perform the same regardless of the time frame used. Let's take a look at the rules. Number 1, wait for the ADX indicator to show a reading above 25. Before we even look to see if the market is going up or down, we must first wait for the ADX indicator to show a reading above 25. Based on the ADX indicator trading rules, a break above 25 signals the beginning of a strong trend or the likelihood of a trend continuing or developing. We all know that the trend is our friend, but without real strength behind the trend, the newly formed trend can quickly fade away. In order to gauge the direction of the trend, we also need to look at the actual price action. This brings us to the next step in the ADX strategy. Use the last 50 candles to determine the trend. For sell signals, look for price to develop a bearish trend. No matter the time frame, we need a practical way to determine the direction of the trend. By using a sample size of 50 candlesticks to determine the trend, we ensure that we trade in the current trend direction. As you know, I like to keep things simple, so if the price is heading lower during the last 50 candlesticks, like this example, we're in a bearish trend. Now the next step gives us a sell trigger. Step 3, sell when the RSI indicator breaks and shows a reading below 30. For our entry signal, we'll be using the RSI indicator. Normally the RSI reading below 30 shows an oversold market and a reversal zone. However, smart trading means looking beyond what the textbook is saying. In a strong trend, as it's defined by the ADX indicator, that's precisely what we want to see. We want more sellers coming into the market. So we want to sell when the RSI indicator breaks and shows a reading below 30. Next, step 4. The protective stop loss should be placed at the last ADX high. In order to determine the location for the stop loss, first identify the point where the ADX makes the last high prior to our entry. Secondly, find the corresponding high on the price chart from the ADX high, and there you'll have your stop loss level. Lastly, step 5, take profit when the ADX indicator breaks back below 25. Our ADX strategy seeks to only capture those profits resulting from the presence of a strong trend. Once the prospects of a strong trend fade away, it's time to take profits and move on to the next trading opportunity. To accomplish that, we take profits as soon as the ADX indicator breaks back below 25, because an ADX reading back below 25 suggests the prevailing trend is running out of strength. And as always, the above was an example of a sell trade using the ADX indicator trading rules. Use the same rules but in the opposite direction for a buy trade, as you can see here. The ADX trading strategy is a great way to be sure we're in a trend that is going to continue and not fizzle out. By applying the ADX indicator trading rules, you can take advantage of the strength of the trend and cash in quick profits. As you probably know, the best trades come from catching strong trends, and the ADX trading strategy can help you accomplish that. But remember, trade signals are never 100% accurate. If you enter a trade and end up taking a loss, you did not necessarily do anything wrong. In fact, if you take 10 trades that lose, you still may not have done anything wrong. Trading is based on probabilities, and you may have a series of losers before a series of winners. So practice and gain confidence in your strategy so that you won't give up on it during the drawdowns. And that's it for this week's strategy. I've probably already told you guys this, but I've got an app, and it's my first one. It's called the Cash Alerts app. The app allows you to see my trade picks from the YouTube channel, plus additional trade picks that I'm personally looking at. It will also let you chat with me. Most days I get on the app several times, and I'll be happy to answer your questions or talk about the weather or rock climbing or CrossFit or whatever happens to be on your mind. I'm in the process of doing a few videos to give you details on the best way to handle the trade setups in the app, so please be patient with me and they'll be out shortly. The marketing guys at Trading Strategy Guides tell me that we're about to be done with the beta test of the app, but it's not too late to get it at beta testing prices. So don't wait too long. Just click the link in the description box below. Be sure to come back next Wednesday as we take a look at a few more trade examples in our trading education series. And don't miss my trading picks of the week on Mondays and my strategy of the week on Friday right here at Trading Strategy Guides YouTube channel at 3 p.m. New York time. Be sure to subscribe and hit the bell so you'll be notified when these videos come out. Have a great weekend, and I'll see you with a couple of trade picks on Monday.